The broadcast is now starting. All attendees are in listen-only mode.
Well, welcome everybody to our second Wide World of Startups presentation. We did our first one just about a month ago, and it went very, very well. And we now have today we have 5 companies with us. We did have a sixth, but unfortunately they had to at the last minute cancel yesterday. So a word to everybody: if you're a startup and you're presenting, whether it's in person or online, make sure you've asked for the time off from work. Otherwise, it can create a problem. And we have 3 panelists with us today. Two of the same from last time: Brad Caton from Boston and Gordon Monk from Vancouver. And Paul Kors is joining us today from Vancouver as well. I'm going to let them each introduce themselves briefly, and then we'll have 2 very quick poll questions, which will only take about a minute, and then we'll get started into our first presentation. Brad?
Yeah, sure.
Hi, everyone.
This is
Brad Caton. We have an echo. Anyway, I am an entrepreneur and an investor. I'm an angel investor in 3 different angel capital groups.
Ooh, man, I'm getting a complete echo on everything I say.
Brad, do you want to try calling back in or using your?
Sure.
Yeah, it sounds like there's 6 of you.
Yeah, I'm gonna try that.
Okay.
Well, here, let me go do my bit, and that'll give Brad a chance to maybe dial back.
Yes, Gordon, go ahead.
Sure. So I'm Gordon Monk from out here in Vancouver. I'm the founder and principal of Performance Capital Advisors. We are a boutique investment bank. Our sweet spot is sort of $2.5 million to $25 million, but we'll go on either end of that for the right deal. We have I guess you might say we're agnostic in terms of our focus, but over the past 12, 18 months, we seem to be getting more involved with technology ventures. And I guess you might say that if I really had to define the sweet spot, we really like and are having success with technology companies that have sort of progressed a little bit further down the development roadmap. Perhaps they've got a commercialized product or near commercialized product and really need the last injection of cash to take that to market. So happy to be here and look forward to listening to the presentations.
Thank you, Gordon. Paul?
Yes. Well, delighted to join. Thanks, Bob, for having me. Also joining you from Vancouver. My ID there says Zelcor Capital. If you Google that, you'll find nothing. It's just a made-up name that's actually just me. My background is I've invested in private equity deals for probably over 20 years now, and been involved in several different types of a whole host of different businesses. In the last 4 years or so, I've gotten involved in angel investing in particular. I'm a member of the Vantech Angel Group here in Vancouver. I'm also have been asked to join some due diligence work with the local Keiretsu Group here in the Pacific Northwest. My passion it really is supporting entrepreneurs and having their visions come to fruition. So that sometimes has taken the form of writing a check, and in a couple of cases recently has involved me becoming involved. So I've gotten involved with a couple of businesses in the last little while, joining primarily on the finance and corporate secretary type roles. The latest 2 ones have closed financings in 7 and 6 figures respectively. And also a couple of years ago, I was involved with a privately owned gold company that we tried to finance and take public when the gold market was in the process of crashing. So I learned a ton from that in terms of financing, and just had a really great time and loved the whole private equity space. So that's me.
Thanks, Paul. Brad, are you back with us?
I am. So
Okay.
now I'm trying on the computer. Hopefully this is better. I don't hear an echo. So
Yeah, no, you sound great.
Okay, great. Okay, well, hi everyone. I'm Brad Caton. As I was trying to say earlier, I'm both an entrepreneur and an investor. Depending on how you count it, I've started 5 companies or 7 companies, depending on how you count it, over the years. Austin, Texas, mostly Silicon Valley. I'm now here in the Boston area, so those are the 3 places I've lived and been an entrepreneur. And then about 4 years ago, based on two startups I had founded that had good, decent exits, I started angel investing. I've done about 15 angel investments. I'm in actually 2 different angel capital groups and 1 angel capital fund. So I'm in the Launchpad Venture Group here in New England, which is the largest in New England by deal flow, by money put into companies at least. I'm also in FP Angels, which is a New York-based yet national angel capital group. And then I'm a general partner in an angel capital fund based in Boston, but up and down the East Coast, called the Investors Collaborative. And I like to invest in quite a few different sectors: Internet of Things, digital media, enterprise software, what I call general IT, which is a catch-all, and healthcare if there's not FDA involved, like healthcare information systems.
Brad, thanks very much.
Yep.
So we've got, I'm going to run 2 very quick polls, and then we will get started with our first presentation. This first poll is actually, I think both questions are going on at once. I'm just trying to get a feel for which time of day is best to run these presentations, whether during regular business hours or after hours. I'm sorry, those are the 2 answers. So we've got just waiting for a couple more people to vote. We'll give it 5 more seconds. Okay, everyone's voted. Thank you very much. And 86%. Classifying yourself either as an investor, a startup, or just someone that's interested in listening.
We did lose you for a second there, Bob. So what was the 86% was what? We missed
86% on the first question said that running this during normal business hours was best.
Excellent.
And so 100 have voted, and vast majority are startups. So we're now going to go into our first presentation, and Aaron, I am making you a presenter, and you should. Let's.
For my screen here.
Yeah.
All right, you guys can see my screen.
Yep.
Hello, everyone.
Great. So whenever you're ready, Aaron.
All right. Thanks for the opportunity to present today, Bob. So I'm Aaron Cancel. I'm founder and CEO of SimpleTix.com. Now stop. I know exactly what you're thinking. We're not yet another ticketing app. It's a crowded space, and let me tell you why we're different and what we're doing differently. So we focused on just the B2B. Organizations with many events, recurring events, businesses such as theaters, concert halls, parks, and resorts. And I'll cover this right now. Can everybody hear me okay?
Yeah, everything sounds good.
Perfect.
Yeah,
all right. So Actors Theater is actually one of my favorite clients, so I'm mentioning them first. They actually helped us shape a lot of SimpleTix, everything from promotional tools that we have with SimpleTix and reporting capabilities. Actors Theater sells their tickets on their public website. They use the SimpleTix Facebook app, so they can sell tickets directly through Facebook, and they also sell tickets in the box office using the box office side of SimpleTix. Actors Theater uses Authorize.net for payment gateways. At SimpleTix, we're compatible with 27 international payment gateways. Interactive Theater is another theater that uses SimpleTix. They actually run 3 separate ticketing portals with SimpleTix, one in UK, one in Australia, one in Netherlands. The two that are UK and Australia use the brand new PayPal Express checkout, and the one in Netherlands uses something called iDeal. Ideal is one of the most popular payment processors in the Netherlands, and the Netherlands is one of our key markets in the Europe outside UK. At SimpleTix, we've done all sorts of festivals: chocolate, cheese, wine, beer, and chowder festivals on our platform. Last week, New England's largest beer festival was on SimpleTix, and the largest chowder festival in Connecticut was actually on SimpleTix last month, called Chowderfest. Ahead of the event, we just launched our brand new Android ticket scanning app, so attendees of this event could simply just bring their smartphones or their paper tickets and have their tickets scanned right on site. They sold around 3,000 tickets for this event. So to date, we've sold over 750,000 tickets on our platform. And this is without really spending anything on sales and marketing, just word of mouth and basic listings in software directories. So over the years that we've found that we are the best solution for resorts and adventure parks. It's a $90 billion market. And there's not that many other people out there tackling this space, and we think we're the best suited for it. So two of the largest, our biggest clients that are resorts right now are the Everglades Holiday Park, that's home of the TV show Animal Planet's Gator Boys, and Lake Lanier Islands in Georgia. They both have been using SimpleTix for 3 years. So some of the key features that we offer at SimpleTix for resorts are everything from Facebook app, online ticket sales using our ticket kiosk, boat slip reservation, which is a really cool feature I'll talk about next. The ability to sell things like parking and beach access vouchers, shuttle bus reservations, and our tour kiosk, which I'll also include in this slide deck too. So our customer walk-up ticket kiosk. This is a solution where any attraction can install a touchscreen tablet or kiosk where customers can walk right up and have tickets sent right to their smartphone. So this could be used at any sorts of marina or zipline tour or anything like that. We also offer this really cool feature for dock reservations. Lake Lanier was our first client on this. So it's a really cool way. You can go to the website. You can select your arrival date and departure date, just like kayak.com. You can see all the different slips available at each of the docks. Choose one of the docks and then see all the available slips. If a slip is partially available, it's yellow. If it's completely unavailable, it's red. Everything is real time, so as soon as someone else buys a slip, it'll become red. And pay for your slip access for those 2 dates. And we also have a way to upsell clients, so you can sell beach access vouchers too. So Tour Kiosk is our brand new feature we just launched actually 3 weeks ago. And it's at Everglades Holiday Park. This is going to be our pilot project. It's a way that tour operators can sell tickets on site for cruises, walking tours, and boat tours using this handheld tablet.
So Aaron, just a 1-minute warning.
1 minute warning. Okay. Customers can sign the liability waivers. Print the owner of the app can print the ride vouchers, assign people to tour groups, and as soon as a tour guide arrives, a salesman can print out the list of passengers directly from this app. This is a photo from Everglades Holiday Park that I took. We did our pilot a couple weeks back, and everything was really successful. We're planning on launching it there about a week. These are the three key areas that we're planning on working on with this launch. I can talk more about this afterwards. And this is the revenue possibilities with what we're doing. Right now, our average per year is $10,000 per resort per year. And there's a market size of 30,000 resorts in America. So there's a total revenue possibility of $300 million. I'm the founder of the company, and these are some of the organizations I've worked with. E-commerce is my passion. It's actually my bachelor's degree. I went to Johnson & Wales in New England, Rhode Island. And this is some photos of the SimpleTix team here. We're hiring in DC to really grow out our team, and Max Major is actually considered one of the #1 DC entertainers, and he's both a customer and one of our board of advisors. And this is our final slide. We're looking to raise a $500,000 round, convertible notes, and the focus really here is on growth and channel partnerships. We've already developed the application, so all the marketing money is really going towards growing the company.
Aaron, great job. Nice presentation.
Thank
and we'll now have 10 minutes for questions.
Okay.
Gordon, Paul.
All right, why don't I kick it off? It's Gordon here. Aaron, great job. It was a cool.
Thank you.
Cool presentation. I didn't really get it at the start, but then when you sort of got to the dock reservation example, I totally got it at that point.
Okay.
It's pretty cool. I wonder if you could use it for parking reservation stuff too.
We could. I would just avoid parking just because there's a bazillion and one apps out there for parking, like Parking Panda, Parking fill in the blank. There's so many different parking apps out there right now. But it's kind of quirky and kind of funny that it's great for boat parking, and it kind of just makes our
Totally. I spent a bunch of time looking for spots this summer. A quick question for you on the finances. How much? Talk about valuation if you can, and talk about how much has been invested in at this point.
Yeah, so right now we're totally bootstrapped. I've been able to sort of use revenue from selling our product to keep everything going afloat. And we're also part of the Microsoft BizSpark Plus program. So Microsoft has sort of been comping us for our hosting, which was one of our largest expenses. So we've had no outside investment. We've been able to use revenue to keep this company alive.
Cool. And on the 500 that you're looking for, you said some sort of convertible note. Well, what's the valuation you guys are setting right now?
I'm saying that our valuation is 2,000 right now. That's being pretty conservative.
Sorry, 2 million?
Yeah.
2 million. Okay, cool. That's all I got. Thanks, guys.
This is Brad.
Hey, Brad.
Yeah, appreciate it. Interesting, very interesting what you're up to. So you have the slide up here that says, just under $10,000 per year, per resort.
Right.
Have you had a chance to do an analysis of what your customer acquisition cost is?
It's a really hard question. It's the number one question I get is what is the cost per customer? It varies. If a customer finds us through a software search directory, signs up, and is able to get everything running without really any too much help from us, it's a pretty low cost. It's practically nothing. But if it's a small, yoga festival going to sell, 100 tickets, and they spend 8 hours of our customer support time, it's a higher cost. So it varies. I could say on average maybe it's about $10 per client to bring them on board. Everything from like that pay-per-click of $3 to basically 45 minutes of support time on the phone.
Okay, and then related to that, how do you scale? How do you get? Is it channels or web marketing? How do you get hundreds and hundreds of these guys? Well, not hundreds, but dozens and dozens, I guess. Looking at your model.
Yep. Actually, I'm bringing on another advisor right now that's giving me help with the channel partnerships and marketing. Right now, we're talking with Wyndham Resorts. Wyndham has a couple thousand resorts across America. So if we can get them to use Tour Kiosk, that's the way we scale overnight. From we're looking at shooting for 30 resorts at the middle of 2015. We're gonna have 300 resorts overnight if we get a channel partnership with them. So we're set. There's a lot of different other marketing possibilities. We've been doing a lot of work with Minuteman Press. It's a local print shop here in Alexandria, but they have offices all over the country. And we actually kind of dialed in a lot of our printing templates, so it works really well with Minuteman Press. So there's a possibility there that anyone going to Minuteman Press that's having a festival, we have an alliance with them where they'll always say, hey, you can do the ticketing through SimpleTix, and there's one button if they want to pre-print all their tickets where they can just click the button and have their template, their PDF file of all its tickets, go straight to the local Minuteman Press shop. So that's another way to do channel marketing. There's lots of different ones. Right now, there's an organization in Hawaii, Hawaii Island Ministries. They just signed a deal with us last night to do all the ticketing for their upcoming conference in 2015, and they wanted us to add an integration with Donor Perfect. It's an online donation tool. So all the data from SimpleTix, as soon as somebody completes an order, it'll also be synced with Donor Perfect. Donor Perfect is a really old company, and they do a lot of things other than e-ticketing, but a lot of things close to it. So something like that could be a great partnership, also an exit opportunity for the company too.
Okay, very good. Great answer.
Well, Paul here, Aaron.
Hey, Paul.
Great job on setting this up so far. Yeah, I was actually on a boat this summer sailing, and so seeing the boat reservation thing would be so elegant compared to the CB radio that we were using at the time. So yeah,
it was difficult. Cool. It was like when Linear started doing this. They had two old ladies in a room with a bunch of charts in front of them that were doing this over the phone. It was frustrating for everyone. But with the online solution, they actually can see visually where the slip would be. So a really good way of doing it. Plus, the ability to upsell them was like one click away. So we just added that feature last summer. So you can add on a festival pass if the festival's going on that weekend, or add a beach access. So basically, it goes from 1 or 2 tickets all of a sudden to 8 tickets really quickly.
Very good. What are your thoughts on on sort of long-term plan exit or paying out revenue? Like when do I, if I invest, when and how do I get my money back?
I think we're looking at maybe like 1 to 2 years at this point because we've really built out our product. We have a pretty strong customer base right now. It's growing. We just moved over to the cloud in April this year, just recently. So before we were a single tenant environment, so scaling really wasn't there. It was kind of expensive per site. Every site had its own database, but in the new version that we just launched, the cloud-based version, we can scale on demand. We're 100% backed by the Microsoft Azure platform. So even like Chowder Festival, they literally had 3,000 people scan tickets over a 30-minute period all at once. Our systems are designed to scale, so as soon as people basically get that rush, all of a sudden we can scale out servers to meet the demand without any problems.
Good for you. Good for you. And what are your when people look at your service offering? I'm a big proponent of a thing called Net Promoter Score. So what are the main things that people negatives, those top 2 negatives and top 2 positives that you've gotten from the market about people who use your service?
Yeah, so SimpleTix, we are really focused on the venues and providing the ticketing platform and the tools that you need to really do your job selling the tickets. On the promotion side is where we're kind of weak. We're not really an event promotion company. And that's where we're kind of drawing the line, saying like, look, we're providing you the platform to sell your tickets, but we're not really providing the platform to promote your event. So that's where you should really be hiring like a social media team to really promote the event or PR team. But we provide you all the tools you need, for like promo codes, buy one get one free codes, email marketing, and we've enhanced that pretty greatly over the last couple months. We just did a huge integration with Mailchimp recently. So we're integrated with Mailchimp eCommerce 360. So whenever you send out an email through Mailchimp and use eCommerce 360, we can track and push back all the data to Mailchimp on the orders. So you have the ability to sort of quote unquote nag your customers that didn't buy tickets yet. Hey, you didn't buy tickets yet. Here's a bigger discount. So that's one area that we kind of lack, but we did recently improve with the Mailchimp eCommerce 360. Yeah.
Okay. Thanks.
Sure thing.
We have 2 minutes left. If there are any other questions, Gordon, Brad.
Well, if we have a little bit of time, if I can just follow up then on that last one.
Sure.
In terms of the businesses that you're talking about, so not so much the ticket holders experience,
yes,
the businesses. When
right.
you talk with those customers, what are they telling you about what you're doing well and what you're doing not well?
Yeah, actually, reporting is the one thing that we've gotten beat up over with the last 6 months. Is people just were not happy with the reporting. We're not giving them enough data. And we just took that feedback and started looking at some of the competitors to figure out how they were doing their reporting, and pretty much got like the best of the best doing some analysis. And one of our advisors, I mentioned Max Major, he's a large, famous magician in DC, and he got on our platform too. And we were working with him to say, like, who does the sales reports really well in this space. We started looking at TicketLeap, for example. It says, I think they do it the best, better than Eventbrite, better than everybody else. So we looked at how they did and implemented the similar reporting style in our framework and actually made it better.
Great.
So,
Aaron, fantastic job.
Thanks, everyone.
Thank you very much.
And if you ever want to get in touch with me, my email address is Aaron, that's ARON, @simpletix.com.
Okay. We're going to connect over now to Brent Eastwood of GovBrain. So Brent, I am making you the presenter, and you should be able to accept that.
Hi, everybody. Do you hear me?
Yep, we can hear you. Are you? Make sure you need to share your screen.
Yeah, for investors. Hopefully it works out.
There should be like a play button at the top that says that the screen sharing of the. There you go.
I emptied out my own bank account. So.
Perfect. Okay.
Aaron, how's that now?
Aaron, can you mute yourself there? So I got you. Okay. So Brent, you're all set to go. Take it away.
Hi, everyone. Do you hear me pretty well?
Hear you great.
Okay, good. We're GovBrain. We sit at the intersection of global finance and government, and the sector we serve is the political intelligence industry. And political intelligence is any firm that provides market-moving information to Wall Street customers, and it's usually info about federal government and congressional actions. And this industry, the problem with this industry is it can be expensive, slow, inefficient, and antiquated. And the type of information they sell can also be illegal because federal law prohibits certain types of political insider information. So what we've done is we've attempted to automate this industry so firms can be compliant legally, and so the financial services industry can still receive trading edge based on political intelligence. And we do that through software and not the old boy network. First, search U.S., state, local, and international government websites, and that includes political and financial news sources. Then it links this information to an individual stock, bond, commodity, or currency, and that's called a global macro. And it creates a news snippet as part of a Twitter-like feed, and then an AI machine learning prediction engine predicts the price move. Let's see, it's not letting me advance here. There it goes. Okay, so the bullet point here on marketing and competition is critical, and we've done several months of market research so we can better achieve product market fit with our minimum viable products. And for us, that means shoe leather research, where we physically went around and met with industry experts so they can inform us about who our competition really is. And we know that's a never-ending process, but we have a good feel now about our market fit. Now, at the bottom there, our revenue model is to license our API to DC political intelligence, law, lobbying firms, policy firms, and global risk firms, that whole industry in Washington, D.C. And we want to supplement the research with our tools. And we're selling to those firms right now. Then, after we successfully backtest against actual security prices or actual Wall Street data, and we beat the street through our testing, we'll build out a trading module and do licensing deals with Wall Street and Chicago and London, their trading platforms, or other independent trading platforms. Okay, so you can see a little bit more about GovBrain right there. We've got an office in downtown DC. We got the trademark. We filed a patent application this summer. We are a non-resident member of an accelerator in Silicon Valley. They want us to stay in Washington, D.C. They're in Sunnyvale, part of the Plug and Play campus you guys have probably heard about already. And they're going to insert us into their angel network so we can start a fundraising round out there and see if we can get some validation in Silicon Valley. We are assigned a coach through this accelerator, and he has already founded a company similar to GovBrain. So he's going to help us get to market in New York, Chicago, or London because he's done it before. Okay, you can take a look at our team. We think our CTO is a real star. You can check out all his accomplishments over the years. And we also have a software engineer in Romania. Our advisory board chair has done an interesting deal with us. We call it a barter for equity deal. And so he's given us the services of his public relations and public affairs firm in exchange for a little bit of equity. And then he has an option to buy more equity with cash in 2015.
So Brent, just a 1-minute warning.
Oh, thanks. Okay, so I'll get through our traction real quick. We've only been publicly launched since October 2nd, and that was at the DC Tech Day. So we demoed Bloomberg Government all the way, and you know they told us good news, which is they're not our competition, and they would like us to work with Bloomberg Intelligence and to also join their enterprise partner third-party program, and we would predict their event data and create product for the Bloomberg terminal, and hopefully at the division and enterprise level someday. So our advisory chair knows the CEO of Bloomberg, and we feel confident that we can get an introduction to those programs, possibly this year. We're partnering with a big data company here in the area, and they want to join with us in partnership for pursuing that Bloomberg lead I was telling you about and collaborate on some other projects. Key Insights, a New York City boutique research firm, they're test driving our app right now. Potomac Research Group's a DC political intelligence firm, they're also test driving our app. And that last item there, real quick, that's a concept for a hedge fund trade that GovBrain uncovered, and I did some additional research on. So those are the types of products that we feed back to our potential customers, including this list besides Bloomberg. And that is our value added in addition to the software that they're already using.
So Brent, I'll need to cut you off there. I'm sorry.
Okay, yeah, we can cut off right there. That's fine.
And so we're going to open up for 10 minutes of questions.
Hey, Brent, it's Gordon Monk here. Great job on the presentation. I love the product.
Hi, thank you.
I come from, before starting Performance Capital, a much larger investment bank. So I was on the institutional desk, and you know, I get the trading part of it. I think it's awesome. I love this stuff, and anything where traders can get an edge. You know, this is really cool. I wonder if you can talk about sort of the revenue model a little bit. I mean, I understand this would be a great bolt-on for you know, the Bloomberg, or let's say a Thomson One, Thomson Reuters sort of application. Can you just sort of go through the revenue model?
Sure. What we're telling with the smaller firms is a monthly licensing fee between $5,000 and $10,000 each month, and you know, that depends on the size of their firm. So their analysts would use that, and then, you know, obviously we are into any type of agreement where they would become a reseller to their current or potential customers. So that's the way that would fit into the revenue model. Now, we know that that's not a scalable model, but we want to start with a couple of small firms that we can grow with, because then their users will give us feedback, and you know, we can lean startup-wise keep iterating our minimum viable product. So that part of it's exciting, and we call that sector GovTech, and then we refer to Wall Street, Chicago, and London as FinTech. So once we do a test and we do a user interface that gives traders signals on when to buy, how much to buy, some risk management, then we can reassess that revenue and go after you know, hedge funds and investment banks and trading platforms in Wall Street. So we think we've reached MVP for Washington, D.C. and other policy firms, but we need about 6 to 12 months and a 2-year back test on that trading test that I mentioned before, and the platform. So when we go in front of investors, that's what we'll say, is that, you know, we could use a CAS infusion to make sure that we get MVP on Wall Street and Chicago and London.
Okay, that's cool. I just have 2 more questions, and then I'll wrap it up. By the way, I work with a lot of hedge funds, so I might be able to get you some trials for some validation if you want to talk about that later.
Yeah, that'd be great.
Can you talk about, maybe I missed it, but what's the valuation and what's the ask?
Valuation is $2.1 million pre-money, and the ask is $250,000. And you know, we would use that mainly for front end. My chief technology officer and I handle all the mathematics and you know, a lot of the tables and logic trees while he codes. And so we are not graphics people. So we have a stripped down API that I can show you at a later time if you wanted to make an appointment. And you could, you know, you'd look at it and say, wow, this kind of looks not very good. So we would use it for that, and of course improve our algorithms and our prediction engine, and try to automate the process of spitting out those hedge fund trades, because GovBrain can take it pretty far, almost to the goal line, but it takes a human being to get it over the goal line. You know, like what Peter Thiel says about you know, hybrid models, computer-human hybrid models. So that's where we are right now. But to get to that those hedge fund concepts, I'd like it to get a little more automated. But we do automate on all the trades that I told you about. It's a rolling Twitter feed, and it's a continuous prediction. Every 2 minutes, we do a machine-generated prediction.
Okay, cool. I question whether 250 grand is enough. Just sort of on getting traction and getting to break even. That would be my one question. We can talk about that offline.
Okay. And just to answer that real quick, we'll be working with our accelerator to determine the proper amount of funding. So absolutely, that 250 we could burn through pretty quickly. We'd maybe want to go higher than that. Thank you.
Great. Listen, thanks a lot. Good job. Great product, I think.
Thanks.
Gordon, thanks. Paul or Brad?
Yeah, sure. I'll jump in now. It's Paul Koros. Brent, well done on getting this together. I think it's pretty interesting. I certainly understand. My first question is on the use for the lobbyists. I understand, just as Gord did, the usefulness from a hedge fund or from a Wall Street standpoint. But if I'm a lobbyist, let's say for the sugar industry, that's the one that's present of mind for me. I just watched John Oliver's tirade the other night on sugar. So if I'm a sugar lobbyist in Washington, what do I get from your service that is more than what I would get from having a Google alert on, say, sugar in Congress appearing in any news article?
Yes, the first thing you do on the user interface that we have right now is you would screen for commodities, and then we do ETF cash tags. So it would bring up items in the federal government that it matches on with sugar, pull it out, match to the ETF ticker symbol, and then do that prediction. So that's the first way. The other way is we would take our search web app that does not have the prediction engine, and we would clone that app and give him the model that just includes information on sugar that he can customize really specifically and look for his own search terms. So he would have his own search engine. He could put as many terms in there he wants or as many website feeds as he wants, and he would pick up just sugar. So we would have to do a little bit of a custom build, but as we get more robust with the user interface, he'll be able to screen a lot more, and he could screen just for soft commodities, or he could screen for hard commodities if he's a commodities person. So that's how that would work.
Okay. I kind of begin to see that a little bit more, and so then that sort of leads into my next question, which was often some of these commodities are interrelated. So, for example, sugar could be related to, the price of sugar can be impacted by how regulators may impact, say, high fructose corn syrup and things in the corn market, and so it sounds like I would have to intelligently put in my screening tool as a user of your service to bring that sort of secondary effects into standing, so that if Illinois all of a sudden starts taxing corn or subsidizing corn in a different way, I would be aware of the impact on sugar. Am I reading that right?
That's correct, and it could be even in Mexico where they're trying to reduce the number of sugary drinks in Mexico City. Mayor Bloomberg's idea. And by the way, he's coming back to be the CEO of Bloomberg. You guys probably know. So that's kind of an opportunity and a threat for us, because as we get our introduction, my advisory board member, the person he knows is the current CEO, Dan Doctorow. Well, he's stepping down to be chair. So Mayor Bloomberg's coming back in to be CEO. The good thing is he really likes government and politics. He's booted up Bloomberg politics again. So we'd like to think that he would like us predicting government stuff from his black box news feed. So yeah, we'll see how that goes. The other way is Mayor Bloomberg could step in and kill all the outside vendors. So we're taking a little bit of a risk there, but we'll find out.
Thanks very much.
Sorry, so we have just a minute or two. Brad, I wanted to let Brad get in a question if you have one, Brad.
Well, sure. I'll very quickly ask about, what do you think you're best at predicting at?
You know what's looking, and I can show you some. Let me see if I can show you a couple things. A neat thing we can do. And by the way, this is what our Twitter-like feed goes in. You see the hashtag, you see the headline. It links to an event or article, and we go 1 through 10, with 1, 2, and 3 is bearish, 8, 9, and 10 is bullish. And you can see how we do currencies, British pound. Cyber intrusion affects things. Here's a muni thing with Puerto Rico and Detroit, and here's something global risk on oil. Now, you ask what are some of the things that we could do. We can test our data and analyze our data by looking at our predictions. And what you see right now is a normal distribution. So this would be a stable time according to GovBrain, like a lot of 4, 5s, and 6s, a lot of neutral events. So we look at that as a stable, and the horse is not running; he's just standing there. But if there's any type of skewness one way or the other, whether it's going towards boom time or it's going toward a bust, depending on our predictive data, then we start seeing these movements. And the good thing that GovBrain likes to predict the price of the dollar, treasuries, gold, oil, those types, the VIX. Those types of indicators for financial Armageddon even, So you can take a look at this. This would be a bubble forming where we're getting the skewness over to the 8, 9s, and 10s, and the events start galloping. Or worse, we get the other way, which is 1, 2s, and 3s, and we can do this, weekly, monthly, or by asset classes. And then after that, we can plot where these problem areas are coming from. Whether it's West Africa and things like that. So there's interesting things we can do. So I would say, one of the favorite things for GovBrain, we get a lot of gold, we get a lot of Obamacare things, we get a lot of silver, a lot of types of risk on, risk off trades, and we think that's a great way to monitor the financial system, because in Washington D.C. or anyway throughout the world, there's only a few type of entities that are sitting there and constantly monitoring the financial system for good things or for bad. And we think we could possibly supplement the folks at the IMF, Department of Treasury, the Fed, that are doing this with Excel spreadsheets. And we think with the forward-looking data done by software, we can get indicators of when trouble brewing and when there's irrational exuberance too.
Brent, I'll have to stop you there. Great presentation. Thanks, panelists, for your questions. We're going to move on to our third of 5 presentations. Connect the Doc with Nadim Kassam. Nadim, I am making you the presenter, and you should be able to accept that now. Fantastic. So Nadim, if you want to play your slideshow, and can we hear you, Nadim? Yeah. Are you on the line there?
Hey, can you guys hear me?
Yeah, can hear you now. Great. So take it away.
And my screen?
Yep.
Awesome, guys. Thanks, everyone, for having me. My name is Nadim Kassam, and I'm really excited to introduce you to Connect the Doc, an online platform we've built that is changing the way healthcare clinics and practitioners digitize, grow, and manage their referral networks. So, what's the problem? Well, it's simple. Right now, the number of healthcare clinics is growing rapidly, and this means more competition. Healthcare providers now more than ever have to act and think like entrepreneurs. Most of these professionals have never had any type of formalized business training, yet growing their business relies on their ability to attract new patients and retain their existing ones. Meanwhile, as technology continues to improve, patients are becoming more selective. The decision-making process almost always takes them online and includes things like clinic location, appointment availability, reputation, and insurance coverage. So how do healthcare clinics attract these new prospective patients? It used to be all about better patient care. When a patient saw their family physician, chiropractor, or dentist, they would spread the word and refer their friends if they were happy with the quality of care. Now, Practitioners are following the masses and moving their efforts to online strategies where they're spending both time and money to get new patients. Time and money that could have gone towards providing better service for their patients. So the question for us was, is there a way to utilize technology to help healthcare practitioners grow their business so they can focus on providing better patient care? And the answer is yes, and that's what Connect the Doc is. So Connect the Doc is an amazing new way for healthcare professionals to get new patients without having to spend an excessive amount of time or money. We do this by helping them focus on 3 different types of referrals: online referrals, practitioner referrals, and patient referrals. Here's how it works. Online referrals revolve around our marketing and appointment booking platform. We've built a tool that allows clinics to feature short notice availabilities that can be booked or requested online 24/7. Clinics and practitioners get access to a set of widgets, buttons, and landing pages that can be placed all over the web. So no matter where and when a patient finds them, there is an opportunity for a new booking. For practitioner referrals, we just launched this new feature where healthcare professionals can easily connect with practitioners in different fields, as well as send, receive, and track digital referrals. These digital referrals are connected to the online booking platform, so we reduce the referral leakage and close the loop. It's a really great way for practitioners to build their referral base and work together to provide their patients with the best possible care. And finally, we're in the process right now of developing the patient referral platform, and this new feature will make it painless for practitioners to ask their existing patients for referrals. Once the development for that is complete, patients will be able to easily refer their friends and family through various social media channels. At the end of the day, by helping clinic owners grow their business with these 3 types of referrals, practitioners will be able to focus on providing a higher quality of patient care, which will in turn lead to a better, more loyal, and larger patient base. So now that you guys have a better idea of what Connect the Doc is, let's go through the business model and some numbers. So we're a SaaS company and have both free and paid accounts. Paid accounts range from $79 to $129 per month, depending on the package and the number of practitioners at a clinic. We've been selling now for just over a year. We started in the greater Vancouver area, and in the last few months have ventured into other cities in Western Canada. In January 2015, once we are completely HIPAA compliant, we'll be launching Connect the Doc in the United States, where the market is much bigger with more than 500,000 prospects we can reach out to. So if we go into the metrics a little bit, our average revenue per paid user per year is $750. Our new client acquisition cost is roughly $435, and this number always seems to be going down. The new networking feature that we launched last month plays a huge role in that.
Nadim, I'll need to give you a 1-minute warning.
Perfect. Yeah, so right now we have about 65 paid clinic accounts and 550 free practitioner accounts. And as far as the lifetime value is concerned, we don't have the exact numbers, but our attrition is only about 10% right now. So the number is more than $750 and is going up every day. As far as our raise is concerned, we're looking for $1 million at a $5 million valuation. And these funds will be used for product development, sales, and marketing so that we can launch across North America quickly and effectively. And kind of last thought here, the parties involved with the raise, we're hoping to work with some investors that can help us bring some strategic partnerships to the table and help us connect with some of the larger tech companies or with some of the bigger insurance groups. So I'll kind of cut myself off there, and I look forward to some of the questions.
Hey, Nadim, it's Gordon Monk here, Performance Capital. That was really well done. You present very well. I just have a couple questions here. You kind of delivered everything I was going to ask you. But you've got some paid subscriptions right now, and you've got a whole bunch of free ones, it seems. Based on your experience, what kind of conversion do you expect on the freemium stuff?
So the way that our accounts work is we have a paid clinic account and a free practitioner account, and we connect the free practitioner account to the paid clinic account. But we did just start offering free trials for the paid clinic accounts, and the conversion has stayed the same for the most part. I think actually, if I might have a slide later on here, our sales is hold on here. Yeah, so if you look at the way that we do our sales, we kind of track everything as well as we can. So for every 100 people that we reach out to, 8% of them are engaged, 51% agree to a meeting, and then 48% of the people that we actually speak with and give a demo sign up for the service. So, yeah, that's kind of how our sales process works, and it takes us about 35 odd days. Yeah.
Okay, so when they sign up for the service, they're signing up for the free service, right?
Yeah,
is that what you mean?
Got introduced. Yeah, so that just got introduced a month ago. So, yeah, they start for the first 30 days for free, and then they continue to use it.
Okay, I got it. I understand. I have another question too, and if you said it, I apologize that I missed it. In terms of market penetration and bringing on more clinics, I mean, I could see if you're going on a clinic-by-clinic basis with a sales team, it's going to take an awful lot of time and an awful lot of money to bring on, you know, big numbers. What are your thoughts on sort of channel partners or partnering with insurance companies, or how do you plan to sort of get the most bang for your buck?
So that's a really good question. We know for sure that just going one by one, our acquisition cost is about $450. When we launched the networking about a month ago, it actually really helped us out because we just talked to the people that we're selling the service to, and we tell them, hey, listen, who are your referral partners? Give us their names, and we'll reach out to them. So that pretty much gives us the introduction. And so now our acquisition cost in the last couple of months has actually gone down to about $200, $250. But channel partners are obviously a huge part of it. So for us, insurance companies would be huge. If we could get some of the bigger insurance companies signed up, that would be great. We're also looking at some of the larger groups of healthcare clinics, because now you've got a lot of these, larger groups of clinics where they'll own, maybe 200 to 300 clinics across Canada or across North America. So our job is, my job is to actually connect with those people and try getting them to sign all of their clinics up at once.
Okay,
so, yeah,
cool.
And then kind of
Sorry, go ahead.
Sorry, go for it. I was going to say the last kind of component to our channel partnership strategy is to connect with the software providers that already have their practice management softwares inside of the clinic. So if we can integrate our software with their software, hopefully we'll get access to hundreds of clinics that are already using their service.
Okay, cool. And I just have one last question. So the $1 million that you're looking for right now on a $5 million valuation, does that $1 million just get you to break even, or is there some sort of dry powder in there to help you beyond, or maybe just talk about your path to break even?
Oh, that will get us well beyond break even. So we've only spent about $250,000 building the platform and growing it to where it is today. That $1 million will be divided into mostly sales, marketing, and product development, and about $620,000 we think will be used towards sales, and even just with with the same acquisition cost of $437 to bring on a new client. We think we can get 1,400 new clients and reach revenues of over $1 million just with with $600,000. And obviously, as the network continues to grow and have the network effect, our acquisition costs will continue to go down, and we'll continue to be able to bring new clients on at a much lower rate.
Okay, awesome. That's all I got. Great job.
We've got about 4 minutes. Paul or Brad?
Yeah, can you touch on equity, Nadim? And I echo, by the way, Gord's comments. Excellent presentation, and very good. What you've done here is very good.
So what specifically to equity are you looking for?
Oh, exit, I said, sorry. What are your exit plan? How are you thinking, strategic investors, whatnot, yeah.
Yeah, so our exit strategy is likely to be acquired by one of the bigger companies. The market right now is super hot for health IT. And there was about $1.1 billion going into tech companies helping clinic practices just in Q2 of 2014 alone. Demandforce, they were acquired by Intuit for $420 million. So for us, our goal is to build this to as many clients as we possibly can and try to keep as lean of a model as possible, and hope to sell the company, more than likely to a pretty large insurance company, or a company that works with tens to 20 of thousands of clinics as opposed to just a couple hundred. They would see a huge benefit in using our service and kind of pushing it to all of the clinics that they work with across Canada or North America.
Okay. Any integration with other social media? So if I wanted to tweet about my great chiropractic appointment, as a customer, can you do that and then through Twitter or Facebook or something like that? Or how do I share with my friends?
So there's two components of it. So the first part is obviously you want to be able to say thank you to your practitioner, and you want to help them grow their business. So with the patient referral platform that we're launching in probably 2 to 3 months from now, the clinics will be able to provide any type of link to their patients, which brings them to a landing page. And from the landing page, the patient can select the practitioner, write a message, and then select any social media channel that they want to share that message. So you got Facebook, Twitter, LinkedIn, all of those will be integrated in there, a little bit like Hootsuite. And then what's going to happen is, when somebody clicks on that link, it will take them to the practitioner's profile, where that patient can then also go and book an appointment, and that information is all tracked because we have the online bookings in there. So everything gets tracked, and then obviously, again, it comes down to providing a high-quality service from the clinic's end, where if they know their patients are sending their friends and family, it's their responsibility to write them a thank you note, or do whatever they need to do to say thank you and show their appreciation.
So we have 1 minute left for question. Brad, did you want to get anything in?
Touch on the competitive situation and how you would keep out competitors that would come in and try to copy you.
Yeah, so right now, the competition for us, a platform like similar to Expedia, but for healthcare, where people could come to our site, search for different types of appointments, and book online. We kind of found a flaw in that business logic, and I think a lot of the other companies out there that are doing similar things to us, they're struggling with the same thing, where they're having to pour millions of dollars into the actual marketing of the service so that their clients see a return on investment. Obviously, there's nothing stopping one of the bigger companies from, pivoting and kind of focusing on referrals as well. But it's a pretty big shift for somebody out there to go ahead and copy us, and it would take a significant amount of resources for them to get to where we're at, and it'd probably be in their best interest to just partner with us as opposed to try to copy us.
Nadim, thanks very much. Great presentation.
Thanks, Bob.
So we are.
Thanks, guys.
We're going to move forward with the fourth branch with Leonid Levitt. Leonid, did I pronounce your name correctly? And I'm going to make you a presenter now.
Hi, everyone. Do you see my screen?
Yeah, we see your screen now. Yep. Okay. Are you ready to go?
Yes, of course.
Okay.
Hi, my name is Leonid Levitt, and I am the CEO of the fourth branch. So the fourth branch would be your link to Congress. So currently in the last election, there was 132 million people that voted. 65% of those people did not know the name of their representatives. Congress currently has a 15% approval rating, yet a 90% re-incumbent re-election rate. So we thought about it and we said, what's the problem? So the way our system currently works, I don't know why that's going on, but the way our system currently works is that voters elect officials. Those elected officials create bills. Politically inclined attempt to voice their opinions on these issues. There's a bunch of lobbyists. Officials deliberate on the bills, and then they vote on them. So we clearly saw that this is a problem because there's a 15% approval rating. So we thought, how do we solve it? So the fourth branch is a platform where individuals can come on, create profiles, and then they sign up with their address. We take bills that are debated in Congress, and we put up their summaries on our website. We then give individuals the right to vote if they want to pass the bill or reject the bill based on 10-cent summaries, 5-cent summaries, which we're all getting from government websites. This is already done for us. After they vote, we send the user an email saying, hey, you voted yes for women's rights. Based on your address, this is your senator, this is your House of Representatives member, this is his phone number, this is his email, he voted no. And we do that on a daily basis. So it takes you 2 minutes to get involved in your government, and you get an answer as soon as they vote saying this is how they voted. On top of that, we also have a map feature on our website which shows you exactly how every individual on our platform is voting across the country. We also have a reconciliation feature. So this is how the homepage looks when you vote. Simple summary. You can click over here to basically go to the government summary to read the entire bill. And you can share it on all your social network platforms. If you want to participate and create your own summary of the bill to try to help us, you can always participate over here. This is how the map looks of all the individuals voting across the country. And you can search through demographics. You can also submit a comment, and people can vote comments up or down. So you can curate a conversation between individuals from states, individuals from counties, and we get as specific as districts. If you forgot to vote on a bill that you wanted to vote on yesterday, we have a feature where you can search any bill from any day, any week, and you could always look it up. So this was our idea, and we figured people want to vote, but then they're not going to keep track of it. So the main thing that differentiates us from our competition, websites like Congress Tally, which summarize bills, and websites like PopBox, which also lets you vote on summaries, is we reconcile it. So when election time comes around and your representative is up for re-election, you get an email, very simple, one-page Excel sheet that says, look, these are the issues: military, healthcare spending, agriculture. This is your representative. He's up for re-election. And it shows you the percentage of times he's voted with you or against you. So it's very simple. The way we plan to make revenue on our website is custom polling. So everyone on our website has a profile and a newsfeed, so that all the comments that you put, all of them will go onto your profile. And you can also follow individuals whose comments you like, so that'll go on your newsfeed. So what we do is, say a politician is running for office. He wants to custom poll his representatives. Currently, one of the main solutions is Gallup. At Gallup, you basically pay they usually do poll 1,000 people a day. So we're offering, and that costs them roughly $360 at cost. What we're offering is to poll 2,000 people a day for a penny per person. So the cost is $20 a question. Average Gallup poll is 5 questions, so the cost to the customer, the representative in this situation, would be $100 rather than $360. The second way that we're planning to make revenue is we're planning to package our proprietary data, all the people on our platform, all their data, and sell it to lobbyists and think tanks and media outlets. Now, when users sign up...
Leonid, just want to give you a 1-minute warning.
Okay, not a problem. So when users actually sign up, it's in their privacy policy how much of their information they want to display. And anything they don't display, it's also in our privacy policy that we cannot sell that information. We'll always get their address because that's the base, and we'll always get their opinions, but things like their gender, their income, we don't have to sell that. So currently, we're about to actually launch our platform in the new year in January, as soon as Congress comes back to session, and we already have our mobile apps in contract and paid for with a third-party consulting company, as well as we're working with Columbia University on this as well. And we're going to be live by January, and with the apps in March and April for iOS and Android. So without further ado, with your support of this company, you'll not only allow us to build a great company, but you will also change the face of American politics for the better, empowering generations to come to get involved in our government. Thank you very much.
Leonid, great presentation. You were perfect on time, right down to the second. So I don't know if you practiced a few times, but very interesting stuff, particularly with the midterm elections just around the corner on Tuesday, for us here in the U.S. But let me hand it over to our panelists for questions.
Thank you very much.
Hi, Nadim. It's Paul Koros here in Vancouver. Great job. I think this is. I'm a bit of a political junkie myself, so I just love all this kind of stuff, and the disengagement is always a mystery. I wonder, you touched on something I think which is quite interesting, was the idea of writing articles based on the information that you're finding out. The concern I would have from an investment standpoint is how do you get that initial engagement from a user? So a couple of corollaries that I can think of to your business would be, I think there's a group called 538 in the U.S., and then also the guy Nate Silver has made a bit of a name for himself in terms of some types of polling stuff that they've done and new things. Can you talk a little bit around how your offerings compare to what 538 is doing, and then also how you really get that initial engagement from somebody and keep them engaged? Most people are disengaged because they're just fed up and they don't want to be engaged.
Yes, of course. So we were actually introduced to Nate Silver and 538, but now I think he got bought by ESPN and now he took it private again. So he's doing his own thing again. But so originally our marketing plan was to target students. So we figured, what's the cheapest way we could market this? So we contacted 9,000 professors from across the top 50 universities here in America in every state. And out of those 9,000 professors, unfortunately, only 900 of them actually responded. But out of those 900, 85% said that they would try our platform with their students. So assuming those numbers at 85%, each professor has an average of 5 classes and average student class size of 30. So that's 91,000 users that would try it. Okay, we're not saying that they're going to stay. So what we're actually building right now, which is we kind of delayed our launch on purpose for this, is we're creating a teacher platform, which will basically allow, once you sign up, you also enter your class information if you have class information. And so that will give the professor a list of all the students that he has. Every time they interact with the website, whether it's a vote, a comment, we track that and we send it to the professor. So it's a very easy grading scale. So we don't want to be something that the professors kind of throw on the blackboard and say, look, try this out, and maybe not, they won't retain it. We want to actually integrate into curriculums. And we're going to do it for free, right? We're already doing the programming, and before launch, we're going to have that system up. So the professors have a bigger incentive. It's like, we're creating a platform which will grade homework for them. And we contacted history professors, political science, and law. So Georgetown was actually very interested. Georgetown wanted to work with us exclusively, but I mean, it makes no sense for us to work exclusively. But they also wanted to give us pro bono hours to summarize legislation from their law school, because they have to do pro bono work anyway. So we'll probably take them up on that, and then we'll go to things like Harvard, Columbia law schools, and try to work out a similar system. Now, in terms of why would they stay engaged in the long term, I mean, the students, they would obviously do it for their grade. And the idea is we could build a base from there with the universities, and then we're going to try to integrate into the Board of Education system in 12th grade, because every U.S. citizen has to take a government class. So we can get integrated into the Board of Education curriculum. Same thing, free platform offering to them as a service offering. I think that would be a great step in building a permanent user base, because then you really have them working on it for 4 years, consistently in school.
Great answer.
Hello?
Yep, we're here.
Yeah, I'm done. Yeah.
Okay. Brad or Gordon?
Yeah, sure. This is Brad.
There. Maybe I missed it. If I did, I apologize. Talk about evaluation a little bit, and I think I missed the ask.
Okay, so I actually wasn't aware that we were supposed to have this concrete ask. I mean, currently it's self-financed. So I used to work on Wall Street. I worked in a brokerage, a hedge fund, Morgan Stanley, and then private equity. So I've also done several successful startups, which I've exited out of. So I'm currently self-financing it. Currently, if we had to raise money, we're looking for $500,000 at $1 million valuation, and that would be post both apps running and the website running as a full product offering.
Okay, great. Okay, thanks very much. That does it for me.
Sorry, Brad, you got run over there.
This is Brad. That's okay. That's all right. That's fine. That's fine. Yes, this is Brad Caton. Yeah, great presentation. Love what you're doing. Certainly, our political system needs it. So all good there. On your revenue model with the polling, have you done some validation on that? There's a lot, of course, tools out there to do polling for free, right, or close to free. So, and do you think there's not that many candidates out there too, right? So I wonder so what's your thoughts on that part of the revenue model? I understand the data model will be big, but you got to get the data first. So it sounds like it's a two-stage revenue model. So I'm wondering if there's enough revenue there in stage one.
Of course. So, I mean, we basically have two types of people on our website, right? We have users and we have customers. So the users are basically, the college students and, the adults once they integrate that, the first adopters, whatever. But the customers are the ones that are actually paying for the service. So the customers would be things like, CNN, they want to do a custom poll. See, the thing is, we have very targeted demographics. So the way Gallup does it right now is Gallup actually loses money on its polling business. And the reason they lose money is because they actually do telephone polls. So they actually have automated machines that kind of qualify you, and then if you're qualified, then the person comes on. But it's a very long process. And we've talked to people from Gallup, and they say they basically lose money on it, and even at paying people minimum wage. With our thing is we can give you district information. So yeah, you can use a simple polling tool, but because we have individuals' addresses, and because we're giving you sort of like a value add service for free, it's seamlessly integrated into your profile. So it's like when the user's there, they're not feeling like they're being interrogated, polled, annoyed. They're just answering questions as they go through their profile, making comments, sharing, voting things up and down. So it's not an invasive process. So we feel that our customers are more likely to answer it. And I mean, we're really only charging 1 cent per response. So, for 2,000 responses, you're basically paying $20. If a politician wants a very targeted response, we could give it to him. If he knows that his district is made up of, 400 city blocks, and he wants to poll 30 city blocks, if we have a school within those 30 city blocks and people living there, we could literally give him those 30 city blocks. A regular free polling service would never be able to do something that hard.
Yeah, I guess my comment is more about, that's not a lot of money, right? $20, and what's the customer acquisition cost on that? I understand the value prop. I just wonder if the pricing is maybe too low. Right?
Well, currently we have about 3.5 times less than Gallup, who's like the big dog. So that's why we're sort of quoting off them. So I mean, we could increase prices even double to triple. For us, we just feel like.
Well, one thing you might want to watch is, and I know I'm actually in a polling company right now. There's a lot of polling companies out there. So Gallup is definitely the premium, and I understand that for politics, but they're not the only ones out there, right? So that might be the one thing to look at. I do think, though, and back to your self-financing, you might find that there's not much revenue there, but then you can just jump over to where I think there's big revenue, right, which is selling the data that you can collect. So maybe that's a comment more than a question. Well, I guess I will ask a question on that. I mean, what do you think the prices would be for that? I think there's a lot of great data you'll be collecting. Have you done any kind of modeling of what you'd be making on that or charging for that? Because I think that's very attractive.
Yeah, of course. So, I mean, there's certain things we can't share because it's political. So we can't associate a name with an address with a vote legally. So we basically don't collect names. Like, we collect it on the website, but then we automatically scrap it. We just do that to validate that you are actually living at the address. So we can provide addresses and your votes. So I'll give you an example. I was with a friend of mine from the government of Congo. The Congo is opening a chamber of commerce here in New York City. And he said, look, we're going to need to know how Washington feels about this and sort of how policies in Washington and how the American people feel about Congo. That's a very, very targeted question, okay? That's a custom poll we could run, and then we could run an analytics offering based on that across the country, right? So let's say, we could run this in DC, we could run this in Alaska, whatever they tell us, we can make a custom poll, run it, and then we can run analytics behind it specifically. And for a product offering like that, which is very personalized, I mean, I would personally work on that for the first customers. Eventually, we'd build out basically sort of an investment banking arm, those types of individuals who would work with the data, work with the customer to identify exactly what they want. And packages like that, I mean, we're just planning to charge them, me personally, I'm planning to charge them same thing as a starting analyst makes. So depending on how much you want to pay the analyst. So the starting analyst in an investment bank makes about $30 an hour. So if we're making, if we're paying our guys $30 plus labor, technology, everything else, we'll charge $75 for the product offering. And it's going to be based on an hourly rate. So how long will it take us to make that custom report for you? And we would quote you based on that.
Okay, very good. Thank you.
That's for the analytics packages. If you just want to buy bulk data, like a think tank wants to buy bulk data, I mean, that's a completely separate issue.
Okay, good. Thank you.
Leonid, fantastic job, and thanks very much.
Thank you very much, everyone.
So we are going into our last presentation, but not the least one, and Jag Bansal with Improvonia, I think I'm pronouncing it correctly, Jag, and I'm making you the presenter. Fantastic. Can we hear you? Well, let me let's try again. Go ahead. Jag, can we can't hear you there.
Can you hear me now?
Yep, can hear you now. Okay.
Sorry about that.
That's all right. Are you
Thanks, Bob.
So go ahead. Yep.
Perfect. Thanks, Bob, and thanks everyone for being here this afternoon. It's good to see some familiar names in the crowd as well. So friends at SimpleTix, Aaron, good to see you. So my name is Jag Bansal, and I'm here with Constantine, who's one of the co-founders of Improvonia. And I'd love to tell you what our special little project is all about. So I'm going to start with the source of our inspiration. So what is the problem that we're trying to solve? As you can probably tell from the graphic here, we're working in the food service space, connecting restaurants and suppliers. And after having spoken to literally hundreds of restaurants and vendors, what we notice is the way they communicate and send orders is simply archaic, meaning restaurants are still using fax machines, they're calling in the orders, they're texting the orders, emailing, online orders, essentially any communication channel you can imagine, they're using it. On the flip side, suppliers are facing the same problem. They have all of these channels and they have to invest manpower to receive the emails, faxes, and one supplier we spoke to received 600 phone calls a day. And that's just one supplier. So long story short, there is an inherent problem how these restaurants and suppliers communicate. So is it really worth it for us to go after this market? Well, the size of this market is $680 billion in the US alone. And to put it in perspective, it's the size of 3 NBAs, 3 NFLs, 3 Major League Baseball leagues, and some change put together. So yes, it's definitely worth it for us to go address this problem. How do we address the problem? Let's play. I'm actually going to show you how we go about this. I'm actually logging into our mobile app right now, and this is exactly what the restaurants use to communicate and send orders to their suppliers. So once they log in, they no longer have to call 5 or 10 different suppliers. All the products they need to order are in one place. So for example, if I need to order fruits from multiple suppliers, I simply go into the fruits category. I can see this first product, banana, is provided by Coastal. I just go into the product, order the quantity, add that to my cart. Next product, provided by a completely different supplier. And I no longer have to call the second supplier, and it's added to my cart. If I want to switch from produce to meat, I can quickly search in my inventory, see who supplies it, go to that meat product very quickly without having to call the third supplier, and I can save time once again. Now let's say we need to order alcohol. Instead of going in and adding one product at a time, we've further simplified it by allowing them to create what we call templates, where they can actually set their repeat orders and products, and with a click of a button, add them to the cart. And here I'm applying 3 products all at once to my cart. And when the shopping cart actually comes up, I haven't called 3 or 4 suppliers that you see here. I have simply used an app, and Improvonia on the back end does all the triage of sending the order off. And once the order is sent off, an email actually gets generated in real time. And Bob, I think I added you on the email as well that you'll probably get in a few seconds. And that email essentially has the breakdown of all the products we sent out. Here it goes. And all the suppliers get their own individual email. So there isn't any price comparison. There isn't any competitive advantage that they gain over each other. Now,
so Jag, just to give you a 1-minute warning.
Thank you. Flipping over to the supplier side, there's huge value for them as well, because not only can they track incoming orders, but they also get rich analytics on their own customers that they currently may not have access to. To go back to a little bit about our business model, we provide this service completely free to the restaurants, which has helped us tremendously increase our adoption rate. And on the vendor side, it's a service fee of 0% to 2.9% on each order. And it's been received very well on the vendor side as well. To kind of summarize this, this whole concept in an analogy, it's the idea of when we have to throw a birthday party and call 50 individual friends, that takes a lot of time. But now with eBites or just sending a BCC email, we can get all 50 of those friends communicated very, very quickly. So that's what Improvonia is all about. It's simplifying the ordering process between restaurants and their wholesale suppliers. Thank you.
Jag, thanks very much. So we will open up to our panelists for questions.
Well, I'll go first. Here is Paul in Vancouver. Well done, Jag. This is a massive issue. So, and just as you started, I was like, oh my gosh, this is a huge thing to deal with. So congratulations on doing that, taking it on. Can you walk through the flow of cash from supplier to both the restaurant and then to Improvonia?
Absolutely.
Yeah.
So one of the things we really pride on is that we stay out of the payments processing between the restaurants and the suppliers. And the reason being, we let them manage their invoicing. We want to let them have complete control over it. So the vendors still continue to invoice the restaurants as they do today. Then Improvonia, on the other side, looks at all the orders that have gone through our system on a monthly basis, and then we invoice the supplier directly. So that's helping us gain adoption because we've noticed that restaurants don't, they don't necessarily trust third parties to manage their payment system. So by letting them keep that relationship with their supplier, it's helping us just provide what we do best, is provide this order management service.
Okay, and you're almost getting into it right now, but can you continue with a competitive analysis, how you sit in the competition against the competition?
Yeah, absolutely. In terms of what we're doing, there aren't a lot of companies that are doing specifically what we're doing. I'll tell you a little bit what the competitors are working on and why some of those things are not working playing out well in the real marketplace. A lot of competitors are going after creating an online marketplace that essentially allows suppliers to bid down the prices. And in theory, it's a great thing to do, and it's worked very well in other industries such as technology. What we have noticed, though, suppliers aren't interested in going after price competition. They really want to keep their relationships, and they really value the products and services they provide. And what they're really looking for is a simple-to-use kind of a tool that they can perhaps give it to their sales guy and help them communicate better with the restaurant. So that's where our sweet spot comes in. Is we're not a spreadsheet buying platform. We're simply an order management where we help both sides communicate better, quickly, and efficiently.
Okay, great, thanks.
Mm-hmm.
Gordon or Brad?
This is Brad. This is Brad. I'll go. So there was a company I saw coming through one of the angel groups about a year and a half ago that was doing a very similar thing. I haven't checked in them in a while, but I know that they were running into issues that the chefs of the restaurants weren't that keen on the online ordering system, and they like to do things their own way. And they were stubborn, etc. Can you comment on what you've found in terms of that?
Absolutely. You're absolutely right. We have spoken to literally hundreds and hundreds of restaurant owners, chefs, operators in the area, and it's the same problem that they love using the phone because that's what they're used to. They find it super easy, and that's what they've been used to doing business with. However, when we have shown them that we're actually helping them do the same task quickly and more efficiently, then they really like it. And the other thing is it's avoiding the human error, because they all agree that it is a pain point of leaving voicemails, and then someone interprets the voicemails incorrectly, types in the number incorrectly for the quantities, etc., and then they don't get deliveries on time or inadequate quantities. So with our system, the assurance they have is order's been delivered, it's the right quantity, it's been delivered on time. So that's one thing that they love about it. But you're absolutely right in terms of we've noticed it's a behavioral change versus a technology problem for us, and we're making it really, really simple for the chefs to place orders.
Okay, thank you.
I'll come back in here if there's no other questions. Can you talk about product segmentation from the supplier side? So, for example, playing off of what Brad was just talking about, I had a friend who supplied, had an urban farm and supplied restaurants, and he would price his, he was actually selling zucchini blossoms, and he would price them differently to different restaurants based on their desire. Some of them wanted the bigger ones, some of them wanted smaller ones, and if I just have I can just say just zucchini blossoms, I need to, as a provider, be educated, like, oh, I can actually have 3 products and you can select the different one, or it's my choice, or there's must be some way to customize that.
Oh, absolutely. So in terms of the size of the suppliers, we see anywhere from small farms to small to mid-sized distributors in the region. And what they really like about our product is their ability to maintain those custom pricing, custom accounts that they have for all of their restaurants and restaurant groups, meaning we're not locking them into, hey, you can only have one market price. No, that's not the goal at all. They can actually define different tiers, and then they can customize their unique pricing that they have negotiated, because at the end of the day, that's what restaurants want to see. They don't want to see market pricing. And what the suppliers like about this fact is that they don't have to invest any money in setting up their own online ordering system, because we've actually spoken to many of the players in DC that they have now started to invest in standing up their own apps, standing up their own web ordering, etc. And their customers have told us, and that's the feedback they have given to us, is, hey, all I need is another app. That's great. Now 7 suppliers, I got 7 apps. So we're trying to not create an 8th app. We're actually trying to create a substitution where it's a standard platform that all restaurants use on the front end, all suppliers use to receive orders. So that way, it's making life easier across the board. And just to piggyback off of that, in terms of our adoption rate, I think speaks to it very well. We recently just launched in July of this year, and our goal for the first 3 months was just to get 16 restaurants to sign up in the DC market. And believe it or not, we've got about 159 restaurants signed up to date, because they see the value in it, and especially if they don't have to pay anything and we're doing all the legwork of getting their inventory loaded, it's a win-win for them.
So we have,
thanks.
Paul, thanks very much. We have 2 minutes left. Gordon, did you have a question or two?
Yeah, I do actually. It's sort of an immense space that you're tackling here, so I kind of echo what Paul said. Big project, big opportunity. I may have missed it, but valuation and the ask and the timeline to break even by your numbers, if you can just comment.
Yep. Absolutely. We're recently valued at $3 million, and we're looking to raise $150,000 for our seed round. Essentially, our goal is to use all of that towards product development and sales. In terms of break even, we were initially targeting Q3 of next year. However, what we have seen recently is that could potentially be sooner, because of what we see in terms of our adoption playing out. And the reason I say that is initially we were going after restaurants and asking them who your suppliers are. So it was a very slow and tedious process. One restaurant would give us 1 or 2 suppliers, and the restaurant would give us another couple of suppliers. Now, we noticed if we went to a supplier and got them on board, we could get 200 accounts in a single day. And that's actually exactly how it's starting to play out. We've gone to meat suppliers, we've gone to bakery suppliers, and once they realize that we can essentially become their online ordering system and they don't have to do any IT investment themselves, they're starting to give us their customer list so we can actually start migrating their customers to online ordering. And that's what I say when I say is we can actually break even sooner than Q3 of next year, because this is very recent development in terms of just in the last month or so, we're starting to see this huge influx of suppliers actually giving us their accounts.
Cool. Yeah. No, I get it. Check out Cara Foods when you have a second. It's a big Canadian company that manages a huge chain of restaurants. They'd be a pretty good strategic investor, I would think. I know them a little bit. Just as a comment too, I would suggest that you're probably not asking for enough money, and even from the standpoint of keeping the belt real tight and everything else. From a credibility standpoint, I would ask for more money, given the size of the opportunity. I think you could probably use some dry powder. Going out, and you'll often find, like especially in sort of my line of work from the iBanking side of it, it's often much easier to raise larger amounts than it is smaller. And I think that you're addressing an opportunity in a market size here that would, warrant a bigger ask. That's my thought anyway.
Got it. No, I definitely appreciate the guidance, and that's a very good point. And we've just bootstrapped everything out of Constantine and our pocket, and of course some very close family and friends. And we're also not getting paid right now, so that's how we were trying to keep our expenses extremely low.
Well, not getting paid sucks.
Yeah.
and
keeps us focused on building a business. But no, thank you. I definitely appreciate the guidance, and that's definitely something we'll look into.
Yeah. No. At the end of all this, send me an email. Reach out after. I might have some ideas.
Excellent. Thank you.
Cool. Thanks, guys. That's all I've got.
Paul, did you have one last note there?
Well, just echoing Gord's comment on asking too much. I think there was one other person earlier a little low on the ask side. As just speaking as an investor, I want to know that the startups, the CEOs and the founders of my startups are making rent, and that they're eating decent food, and small raises and them not taking salaries doesn't give me that comfort. So I on that side echo what Gord is saying. It brings some verisimilitude, I think is the word, to actually becoming a real business when they can pay themselves at least a living wage.
Well, Jag, thank you very much for the presentation. Great job. And that was the last of our 5 presentations today. I want to give a thanks to all the presenters and startups. I think, again, compared to our first event last month, this was very strong as well, and some fantastic products and companies in their early stages. At this point, one change that we're going to make that we did before was instead of having people kind of hang on as the panelists discuss the companies, we're going to end the presentation at this time, and we will panelists will convene right after by phone, discuss the companies, and then shortly thereafter we will email out and announce the winner. So again, thank you all for your time and participation today, and hope to see you next time. Have a good afternoon.